Hello and welcome to this week's Real Estate Report on the Finance News Network. I'm Lelda Smits. This week we conclude a series looking at capital city suburbs with the highest rental growth for units in Australia, with a focus on two suburbs in Adelaide. In our interview we speak with Andrew Turnbridge from Ponton Valuations and Consultancy, and in our tax tip we look at whether homeowners can claim body corporate fees as tax deduction. But first, let's catch up on the latest property news with Tracy Tandon.
RP Data's weekly auction data collection shows that auctions are growing in popularity and that auctions undertaken this year have been greater than last year. This is because auctions generally achieve much greater exposure than a private treaty sale, as vendors are often willing to spend more money on advertising. It is also often seen as the best way to achieve top dollar. As the property market continues to perform well and has done so over the last 12 months, auctions simultaneously continue to be a popular method of sale. However, many experts suggest vendors that engage in auctions need to be realistic in their reserve prices and have a backup plan in case the auction is unsuccessful. This would involve direct negotiations with the highest bidder or other bidders, and potentially a secondary marketing campaign focused on the private treaty or tender sale. RP Data suggests that vendors must choose their method of sale carefully and look to differentiate their property from the rest.
This week we conclude our series looking at capital city suburbs with the highest rental growth for units in Australia, with a focus on two suburbs in Adelaide. First, let's look at the unit market in Elizabeth Downs, a suburb located 30 kilometres northeast of Adelaide. With a population of 5,058 in the last census, Elizabeth Downs is an outer suburb of Adelaide, almost 40 minutes drive down Main North Road to the city centre. Originally rural land, the suburb is now residential and has grown to accommodate new residents working in neighbouring suburbs at major employers including Holden and the Defence Science Technology Organisation. Elizabeth Downs is well catered for, with schools and playgrounds, as well as a number of parks that frame the suburb. The sports focus continues at the Elizabeth Oval, located in the neighbouring suburb Elizabeth, which also hosts the state's third largest shopping centre, the Elizabeth Shopping Centre, just next to the Elizabeth Interchange, where frequent and direct train and bus services travel south to Adelaide or north to Gawler. Recreational activities have an outdoors focus in Elizabeth Downs, from walking along the Craigie Creek or a drive east to escape to some of South Australia's best wineries. According to figures from RP Data, Elizabeth Downs recorded the largest increase in unit rents in South Australia for the year to the 30th of June, rising 11.8% from $170 per week last year to $190 per week in 2010. Over the same period, 43 rentals were advertised, down from 50 the year before. The median price of a unit in Elizabeth Downs is $147,750. Our next suburb is the unit market in Door Park, located 8.4 kilometres south of Adelaide CBD. With a population of 2,345 in the last census, Door Park is a largely residential suburb spotted with small reserves and bungalow homes that rest on broad tree-lined streets. Truly an example of why Adelaide has been nicknamed the 20-minute city. The suburb is bordered by both South Road and Goodwood Road. A direct ride north will take you past the Royal Adelaide Showground straight into the central business district. Alternatively, a short drive west offers an escape to South Australian beaches. Further southeast, the charming Adelaide Hills wrap around the city. Door Park is well serviced with public transport, including a rail line in neighbouring suburb Melrose Park, where the Castle Plaza Shopping Centre provides the neighbourhood with a range of specialty stores. RP data figures revealed that the median rental for units indoor park increased by 11.3% last year, from $243 per week to $270 per week for the year to the 30th of June 2010. Over the same period, 27 properties were advertised, down from the 32 the year before, and the median price of a unit indoor park is $280,100. Let's now turn to our interview. This week we speak with Andrew Turnbridge from Ponton Valuations and Consultancy.
Our outlook for the Australian property market, the residential market, I think is much of the same of what we've been experiencing over the past quarter, which has entered a period of stagnation and values plateauing. Values have declined in some cases from the highs of 2009 and 2010. It has been a positive year up until around June 2010. But once interest rates started creeping up and moving relatively rapidly forward, higher, the market responded very quickly to that, and that was reflected in a lower volume of sales, some declines in values in some sectors of the market, and a declining auction clearance rates, which is evident across each state in Australia. Moving forward for the next few months, we're seeing a similar market environment to what we're currently experiencing. We can't see any significant declines in value due to this shortage of housing, rising population, but there is an affordability issue that the market is currently digesting, and it will take some 3 to 6 months for that to stabilise, and the market will reassess itself in due course.
And now to the tax tip of the week from Depreciator, the tax depreciation schedule specialists. Many homeowners are unsure as to whether or not they can claim body corporate fees as a tax deduction. This depends on the type of body corporate fees charged. Generally, there are 3 types of body corporate charges. These include an administration levy, general purpose sinking fund levy and special purpose levy. The Australian Tax Office considers the expenses are deductible to the homeowner based on what the fees are ultimately spent on. That is either a capital item or a deductible item. Since it is generally difficult for the owner to figure out what was spent on what, the ATO have accepted 3 general rules. Administration fund levies that are for the general running expenses of the complex are deductible when incurred. Sinking fund levies that are imposed on a regular basis are deductible, and the owner does not need to differentiate on what happens to the funds, that is whether the funds are spent on deductible expenditure or capital expenditure. Special purpose levies must be traced to see what the actual funds raised were used for. If they were used to repaint the entire complex or replace the entire driveway, they would be capital expenses and thus not deductible. From an owner's tax perspective, it would be better for the strata body to collect general purpose sinking fund levies, which are tax deductible, rather than waiting until something major is required to impose a special purpose levy, which, if used for a capital improvement, would not be deductible. As always, do remember to consult with a tax accountant or tax professional before making any tax-related decisions. And that is the Real Estate Report for Monday the 29th of November. Thanks for joining us. I'm Lelda Smits for the Finance News Network.